Hey, everybody, welcome to the Tech-Mex podcast. We're your hosts, Eric and Mondo, and this is episode 72. We're bringing you the top stories in Bitcoin, tech, and wealth so you too can trade like the pros. Dale.
We will see if you can trade like the pros.
Yeah, so today, since we left off last time talking a little bit about how to do a trade, specifically an option trade or a covered call so you can replace your salary, we thought today it might be a good idea to just go ahead and do a quick demo just to show you guys what it looks like, become familiar just a little bit with the software that you can use, and walk you through a couple things, because at first glance it can be a little bit intimidating, right, Mondo?
Yeah, it is. You'll see, and this is one of the best softwares for desktop that used to be. Right now, a lot of people is using Robinhood, but yeah, it's just to give you an idea from kind of the old clunky way, and how we have come a long way to now Robinhood.
Yeah, that's true. I myself tend to use the app a little bit more, even though the app still has a little bit of problems. But just to show you guys on a bigger screen here, we're going to show you the desktop version. So, what do you say? Let's go ahead and jump in.
Yeah, let's jump in. I really want to stress some of the concepts, and sometimes it's easier on the desktop, and obviously you can translate it into a mobile app once that you can figure out what we're talking about. So, like I said, this interface is called Thinkorswim. We actually mentioned it on the pod before. The person that he kind of built it and created the company, Tom Sosnoff, is usually, if you are looking for options, he has a channel. It's Tasty Trades or Tasty Live now, or Tasty Show, and basically, and it's not that the type of show that you're looking, Ramirez.
Tasty.
So the guy has like a beret or like a little hat, right? It's and long hair, gray long hair. So it's out there. Probably a lot of people have seen him on YouTube. Anyways, that guy, he created this software. By the way, he sold the company almost for 700 million. The whole company.
He's done a couple of projects that have netted him like $1 billion, right? So he's got a couple of billion in the bank.
Basically, after you just rinse and repeat. He did the same. So literally, he sold this company this software, and he noticed that this software was clunky, and then he started building a new one, right, for kind of younger generation, etc., etc. And again, he sold it again. Anyways, going back here, the interesting things, there are keywords. If you go into the top, if you notice that there is kind of your account information. Basically, in this case, Ramirez has how much do you have?
There's $100,000 buying power here in cash. And just for you guys to know, if you want to practice, because like you don't want to use real money, or you don't want to use a real account, with Thinkorswim here, you can do a simulated trading. So it's what's called paper trading. So they'll give you the 100K just so you can practice. And it has real data, real time information, just like a normal brokerage would. But this just gives you a play account so you can practice a strategy, just so you can become familiar with it, so you don't accidentally push the wrong button and lose 20K or something like that. I did accidentally do that recently, not in real money, but in the paper trading. So it does happen. So good way for you to just kind of get in there, play around, and get comfortable with the software.
Yeah, because some of these techniques is not like a use, buy, and sell stocks. You have to understand what is the side of the leg that you are. That's how they call them, legs. And basically, I like what Mike Tyson says, right? It's like everybody has a plan, but until you get like in the fire and you get punched in the face.
It'll feel that way if you accidentally do something wrong. Yeah.
yeah, for sure. I mean, but try it first, right? I think that if you are like trying to put some money here and there, right? So and that way you get the flow. And unfortunately, only a few brokers allow you to paper trade. So that's the reason why TD Ameritrade. This is one of the Now it's owned by Schwab, Charles
Yeah.
Schwab. So, but yeah, it used to be TD Ameritrade by itself. So you see that portion there. Like right now, you see this is a simulated trading paper trail. So right now, Ramirez has like 100K here. Uh, then you can start looking for all of you, obviously all of the stocks. But the first step for us is to buy amount of shares for IBIT in this case. That's what the one that we discussed. So you can look for it. I believe that you can just go to trade and you can use look for it.
Bam.
So this screen is always very overwhelming because you see like a table and it has one side. First of all, you have this is called the option chain. We mentioned it before, and you'll see a bunch of dates, and those dates are the expiration dates. Some people like to call them DTEs.
Hmm.
They again, it's just some lingo that people
Hmm.
like it, right? And
Yeah.
and if you
Days till expiration, right?
yes, and
DTE.
and
Hmm.
and then you see the T1, 15, 27, and so on, right? So you can even go to next year or even like 2027. So those the long time they call them leaps. So that's kind of the jargon and the names. And then you start seeing maybe you open one, maybe the one for tomorrow. When you open them, you start seeing some uh, the, the the basically the amount in the middle is the strike, and it tells you that in the column. You can maybe open more with more strikes. There is something there. Maybe we can put 20 or whatever. Maybe I open it a little bit more. Yeah. So here is where it gets interesting because the price it gets fluctuating, right? So, like we mentioned it in the past pod, the guys that they invented this pricing model, they won the Nobel Prize. So right now, the price of the instrument, in this case the ETF IBIT, is around 55. How do I know? It's just for the thing that is in the middle. So it's telling you that it's at the money because sometimes the options are derivatives, like it's not an exact thing. It's going to be depending on the ticket and the price. It might not always be exact, right? Because there is always fluctuation, but you can tell that it's around that. And before, like maybe 20 years ago, when computers were not like literally personal computers, a lot of the traders they just will see like boards and in the pits in the stock market, and they will do a lot of this option chain with a printed paper. So it's very interesting that it used to be very slow, but in very similar terms, they will actually have their options and their deltas with everything printed out. Imagine that.
It's pretty crazy. Well,
Yep.
as you can see here, right now, the price of one IBIT share is $54.74. So that's what this is here. And so that's just in comparison to the strike price that Mondo was saying here. You can see where it kind of splits down the middle here, where on the top side, it's got this purplish color and the bottom side is black color here. That split here, 55, 55.5. It's in this area. Strike prices.
So the other couple terms that you have to know is that price is called at the money. Is basically the price is hovering at the money of the options. That is important because in that way, that's how when you are buying the strikes, we have to know. The other thing is important is deep in the money or in the money. What it means is that if you see the different color coded for the left side, usually it tells you on the top. The left side is in this screen. It is the calls, and the right side is the puts. Um, if you notice, and the price is basically decreasing from 52 to 54. So when the price is already above that for the call, that means that it's in the money. That's the reason why they color coded in a little bit bluish kind of color, and vice versa, because if it's a put, is the opposite, then it's already in the money. And then you'll hear also out of the money, which is basically kind of the other deltas that they are outside of that at the money. So if you open a little bit more the strikes, maybe old. Yeah, it's gonna be a lot of them. But uh, you can see that you can go very out of the money. But then now scroll horizontally to for us to find the delta because we want to display the column.
Let me change.
Yeah, those are good. So we have the famous Greeks that they call them option Greeks. You have the delta, gamma, theta, vega, and so on. Those are the variables that is pricing the instrument. There is a lot of kind of information here to be able to go through, but one of the important ones is delta because delta is kind of telling you couple things on how the probability on the that the instrument is going to hit basically the price. So that means that if you'll see, maybe we can look for the delta of 30%. That's the one that
Which
we
one?
discussed last time, right? Yeah. So that
Mm-hmm.
will be how much?
55.5 strike price.
All right. This one I was trying to figure out why it's so close to the money. It's because it's just only 1 day to expiration. So what tells you is that there is only there is 70% chance to be below all of that, or vice versa, right? Only
Mm-hmm.
30% chance that you'll get uh, to that price. So a lot of people believe a lot on that. For me, I was telling Eric last week, it's a guidance. It's not it's like it's possible that the price will completely go random and blow up all of those possibilities. But the good news is that because you already have the shares, then you are getting that risk on that premium because we'll mention it that then you will get covered. So that's the reason why the strategy is called cover calls.
Mm-hmm.
So right now, any questions, Eric?
No, I think that makes sense. But to clarify just one thing here, in our account that we're showing right now, we actually don't have any of the IBIT bought yet. So, but something like Thinkorswim, they can combine the purchasing of IBIT and then also the selling of the covered call in basically uh, one session here. So it'll kind of do it for you. Though you don't have to do it like that. You can have your IBIT already purchased and then just do a separate sale of a covered call. How about we show them next week so they can see maybe a little bit more of the breakout of the deltas there. Let me go Feb 21 here and let me go back down to 14. Let's see. So you can see the spread of deltas are a little bit more spread out. Now, there's also other statistics that Thinkorswim can show you, right? Um, that mimic that percentage of delta. There's it can show you kind of like percentage of in the money, percentage out of the money, which is basically just the opposite of this. It should mimic it pretty closely, but what we were mentioning in the covered call strategy last week, where you could just say, hey, I'm going to pick something that has a low delta or a low chance of actually happening because you really just want to keep your underlying asset. So in our case, IBIT, you want to keep it, but you want to make the bet so that you can get the premium. So you just kind of want to keep doing it over and over again without you actually having to sell your IBIT.
I do have a couple friends. We have a channel in Signal. Um, I'm not gonna dox them, so I'm not gonna say their names. But basically, some of them they have a very nice account that they can just go in a zero point 0 delta. So they can just go very, very low out of the money, which the probability is very, very low for them to get covered. And they're just extracting some cash flow. So once that your accounts are uh, big, then you can start doing that, right? And that's basically, and for me, I really like these strategies. Once again, we're just two dudes in the internet. We're not financial advisors, right? But for me, this is an interesting strategy because you don't have to be glued to the screen, right? Like you just can you do your trade once or twice a week, and then just kind of pay attention if you want to roll it or not. We'll explain what is that later. But that's it, literally, and almost you don't even have to. You just have to remember how much are you getting the stock. So right now, let's say if we are purchasing the 1,000, how many IB do you have, or you planning to have?
Let's see. There's $100,000, so we can do at least. We could just do one contract just to show it. How about that?
Sure,
So
sure.
that would be like what, $5,500.
Yeah. No, well, if exactly, you will have to at least buy 100 shares of IBIT.
Yeah. So again, just a reminder from last time, when we're talking about shares versus contracts, right? One share of IBIT is $54.74. So in order to do a covered call, in order to do an option trade, you have to have at least 100 shares because you trade them in sizes of a contract, and one contract holds 100 shares. So that's why when we're going to do this, you have to think in terms of 100 shares at a time.
I personally like to make things that I can do it with my numbers in my head. So I trade 1, 10, 100, and 1,000 because it's easier, right? Like because when you are converting the prices, every price that you are seeing here, you have to convert it by 100, and then by the times of your contracts that you have. If you only have one contract, uh, to tell me which one you're gonna pick. What
Well, let's just say we want to do a delta of 25. Let's do that one, which is at 57.5 strike price.
So that means that Ramirez will be betting that, because it's almost like betting, to be honest. It's like the biggest casino of all, Wall Street. By the way, I have a nice picture of me kicking the nuts of the ball.
Of the
I should
bull.
find that of the ball in Wall Street. Anyways, uh, so it's 25 cents. Then you're gonna have to multiply by 100, which is 25. Then by the number of contracts, if you only have 100 shares, that will put you in $25. So we will receive a premium, a juice, right? Because that's kind of where we're extracting from the market, $25 for our shares that we already have. So which is like amazing. Doesn't matter if our shares, go up and down. Obviously, we'll explain the trade, right? But yeah, that's a good. And this is for next week, right?
Yeah, this is for Feb 21st. So this is for a DT. So this is what an 8 day, 8 DTE. So that just means it's 8 days from expiring. The bet is going to expire next Friday.
Yep.
So let's go ahead and do this. We're going to
Before
sell this
before you
call.
before you do it, let me explain the other ones very briefly. The other Greeks.
Okay.
This is Delta, and there is a lot of things that the brokers and the people that you see in Wall Street with all of the on the news when they are just yelling and all that.
Buy, buy,
Sometimes
buy.
they,
Sell, sell,
yeah,
sell.
basically, right, and they have to keep hedging. They use deltas to figure out how many shares, because also they can see how many shares they have it, and they can make their amounts. But that's kind of delta. Also, you have gamma. Gamma is kind of like the rate of velocity, how delta is moving. No need to know about gamma. Gamma it accelerates when it's closer to expiration. So that's something that you just need to remember. The price will be more volatile, obviously closer to zero DTE, because they don't know how it's going to react. There is no time to basically the last few hours. It can fluctuate a lot. Those are the kind of like the for the Wall Street bets. If you go to Reddit, there is a subreddit called Wall Street Bets. You'll see all of the DGens
Look for that high gamma.
Yes, that's basically and they call them gamma trades. That's where the gamma trades is from. Then you have theta. Theta is basically the amount of money that you're gonna be making per time. Because if you see the price of the contract, it starts at 25 cents, and then it's gonna go to zero because the contract will expire for the other person. Time is in our favor because we wanted the time to pass through. We literally want the best outcome for this trade is that if the price doesn't move, we'll make 25 cents. So, or if it moves, it has to move less than that strike price. So that's what theta tells you. And vega is the volatility. But yeah, usually I only use delta and theta. Those are the two variables. But for right now, let's just go with what we explained last week, which is
Yep.
the delta.
So exactly. So kind of the simplest thing that you can do is just kind of a low risk or low delta, low chance of it actually hitting the strike price trade. And like Mondo says, if you're trading with a big enough account size, even these lower risk or lower delta trades can net you a lot of money, right? So it just scales with the bigger account size. But we start out smaller, and you can start out smaller too, right? You just have to have enough money to start with one contract, which for IBIT, that's about $5,500. So what do we say? We said we're going to do the delta of 25,
Sure.
which is the ask is 47 cents on this one.
The other thing, at least for this UI, sometimes people get confused on bidding and ask, right? Um, if you just remember that somebody's asking for this price, then you can buy it, and vice versa, right? If somebody is bidding, then somebody is willing to pay you for that. That's the sell. It gets confusing sometimes, but depending on the broker, make sure that it's always kind of sells. It sell because you can actually buy the other side. You can actually buy the contract instead of selling it.
Mm-hmm.
By the way, something that you will, a lot of the YouTubers, you'll find a writing also with WRIT, writing. They call it selling. It's like premium writers or sellers, option sellers. All of that is literally doing the same thing that we're doing, which it was confusing when I was learning this several years ago. Like, why? What are they talking about? But yeah, that is the same thing.
Yeah. So let's keep it simple here.
Mhm.
We're looking for calls. So don't get in the put section. Like here on the right side, it says puts. We're looking for calls right now. The opposite of what a covered call is, you can do sell a secured put, but we're not doing that, right? We're going to do selling a covered call. So I think if I could just, which one did we say we're going to do this one? Doesn't really matter. A low enough delta. So we click it, highlights the one that we clicked, and then it automatically does your order here.
But here, that's what happened to Ramirez. Right now,
Oh yeah, it's a
you are
buy.
doing the
Yeah,
buy. Do you see, guys?
click, click it on the bid call right here. So it'll do a
the good
sell.
the good news is that it is color coded. Usually, the cells in Thinkorswim is red, and the buys are greenish. So, and the other thing here is that you can see the in the order. It tells you the number of quantity, which is 10 contracts. Not sure if you have enough.
No, for 10 contracts, that would be, no, that would be too many, right? We would need 1,000, right? 1,000.
1,000 is
1, 2,
55,000,
3.
55.
Oh no, we do have enough for 10 contracts.
Sure.
So we could do 10. So if you notice though, I don't have any IBIT yet. I haven't bought anything yet. So but the whole point of a covered call is that you already have IBIT. So what you can do though is you can select here covered stock, right? And it should be able to. Oh, what did I just do? And it should be able to do them both at the same time. Do the buy of the IBIT and then do the covered, the actual selling the covered call. So in any case, this is how you would do the sell the covered call. And I can actually go ahead and just say that was actually all it was. I clicked that one button and it put the order entry here, and you just click confirm and send, and it'll do it. So there's not much to it. We talked for about what 20 minutes
Almost
in or something.
25 minutes. You just talk for 25 minutes just to tell them click a button.
But all we did was click it. All we did was just click this one right here, whatever it was, and then it put it down here in the order. And then all you got to do is hit the green button, confirm and send. So let's see what happens when we click it. We click confirm and send. It says, "Are you sure?" And we just say send. So that's what it does. And I think we did a market order there, so it should just automatically execute.
That's the other thing.
That's it.
There's a lot of people that they debate, hey, you need to do limits. I personally do market orders because if you are doing one contract, sure, right? But sometimes I'm doing, like I said, up to 1,000 contracts, right? So then sometimes it's harder to get in and harder to get out. So market, it will allow it to fill it quicker. So that's one thing. The other thing is that make sure that that you are watching the credit. It will tell you the amount of credit that you're getting. So you can catch if you're making a mistake, because that's the thing. You can make in options, you can make a lot of different mistakes because of the tools are not very great. They have a lot of buttons, a lot of things. So, and you can create a lot of different strategies with options. You can have an iron condor, you can have like straddles, strangles, and so on, right? So right now we're just seeing one simple strategy, which is the cover call.
And just to show y'all here also real quick, this is where you change it. I think the first one we did a limit. And so it was like, oh, okay, I'm going to wait around until it hits that mark that you told me to. Instead, I just canceled it. And and we can put it to market. So it should execute right away. And so the thing is, let's talk about the premium here that we should be making. I think we kind of glossed over that, Mondo. So we did select this one, right? That had the delta of 24. The bid here is 44 cents. So it should be, and we did what, 10?
Yeah.
So that means for 10 contracts, but remember we're talking about shares here. So that'll be 1,000 shares at 44 cents. 1, 2, 3. We should make $440 on this, minus the, I think Thinkers or Schwab has $20 fee. So it's like $420 that we would make out of this trade immediately.
Which is like nice, right? Because again, it's just the cash flow that you can extract. Obviously, you will have to pay taxes and all of that at the end of the year, but at the end of the day, this is what this strategy allows you to. And again, you don't have to be a day trader to do this, right? This is just one transaction a week, and if you want, you can even do it for the next kind of like DTEs, and you can even get it more, right? So sometimes I have been playing around myself with 7, 14, 30 days, and it works pretty decent.
So that's the basics of how this would work. Again, you hit the send button, and it goes and executes your trade there. You make the premium, which in that case was like $440 minus the fee. That's $420. Our stock, our strike price for next week, it was set to probably it was like $3 away or something, because right now we're at 54. We picked one that was like at 57. So this would have to move $3 by next Friday in order for the strike price to hit. And Mondo, just explain just in general what happens if it does hit or if it is called away.
So um, let me just give you a couple of scenarios, right? Maybe the easiest scenario is that the price remains there. You keep that premium. That was the bet that somebody pay you upfront to be able to bet with you. So then that you don't have to do anything. You already have that. By the way, this money it is very interesting because they deposit in your broker account. The broker literally puts, in this case, 445, whatever was the amount of money. They'll put it in your broker, which is good. I'll tell you what I do. I usually get the same shares. So if I have IBIT, I get more IBIT. Right? Some people want to get it out. Some people want to have like a cash flow, which is okay too, right? And maybe you can even do both. Maybe 50% you put it on IBIT, and 50% you get it out, right? Either way,
Mm-hmm.
you can do whatever you need to. So that's the scenario number one. A scenario number two is if you have to, if it already the price is going up for whatever reason, is called already is in the money, and the expiration date hasn't arrived. Uh, that depends on the broker, but usually they allow you to keep your shares. As in some instances, they will call it out even if it's in the middle of the week. But yeah, check your broker. Usually, these brokers they just wait until expiration to call it out. So that's the scenario number two. The last scenario is what Eric was asking, which is how much was your strike?
It was like
57.
57.5.
So let's say that the for whatever reason the price goes up to 58, right? So it just happens. It is at the moment of the expiration and the price is already 58. What do? You have a couple options there. Option one, if you don't do anything, because let's say that maybe you are a very laid back trader, like, oh shit, I don't even remember if I
Oh, did I do that? Oh yeah, that's how I paid for for my dinner last night. Yeah.
don't worry, you don't have to do anything. The broker actually will do it for you. It will sell your shares to be able to give it to this person. The other person that is buying it, they have the option to basically say yes, I want the shares or not. But from your perspective as a seller, it will do the transaction and they will call them away. That's how they call it. They will call them away and they'll sell it at the price that it was a strike. So in this case, if it was 57, it will be sold into that price and they'll deposit that money. So you'll get cash. It will get settled in cash.
Yep. So you'll get the money, the premium that you made. So in our case, it was like $450. Plus, we'll get the amount that we paid for the shares. So it's like what $54,000. So we'll have $54,000 plus the premium of $440 or whatever it was. So that's what we'll have in our account back. Now, what do you do then? You could just buy IBIT
Buy it
again
again.
and do it again. So
Rinse and repeat.
so you can so you can see it's very low risk. You can extract money from the premiums, and if it gets called away, it's no big deal. You just rebuy the stock again, um, and then you just kind of keep going. Again, this works if it's a stock that you want to own, and in general for us, we're Bitcoiners, so we don't mind owning by IBIT, so we'll just kind of keep buying it. We'll use this strategy just to kind of generate cash flow. And again, you could see that we just bought 10 contracts that cost 55,000. We made $440. You can make $440 like every week or more, right? We did a very, very conservative delta. If you do maybe a little bit more riskier delta, you can get a higher premium. You can get maybe 600 or up to $1,000. We started off with 100K for 10 contracts. Now imagine scaling it to, 20 contracts, 30 contracts, 1,000 contracts, and you can scale your money again. So we did 10 contracts. So let's say we do 100 contracts. So that's 10x. So we could make, instead of just 440, we can make $4,500 with doing 100 contracts, right? So that's why Mondo says if you're working in tens, hundreds, it's easier to do the math in your head there. But you can see that if you just scale your account a little bit more over time, you can easily make 4 or 5 grand a week doing this.
Yeah. And this trade will work until it works, right? So right now it works
Until it doesn't. Yeah.
until it doesn't, right? So I feel that extracted. I sometimes people ask me because I have done different ways to use to see an opportunity, right? Like a few years back, the opportunity was to be able to borrow money. It was so cheap. Like I have loans for 1%. 1%.
Yeah.
It's like I was telling my wife, why in the heck people are not borrowing money? Like this is like ridiculous. Just get free money, right? Like you don't matter what you basically put it on. I mean, obviously you have to invest it. Don't buy like your Lambo with it, right? Your Lambo has to be purchased by your investments, whatever you are making of it, right? But anyways,
Your premiums can
premiums.
pay for your Lambo. Pay for your Lambo, yeah.
That's right. So and again, right? So the opportunity is gone. Like you cannot borrow cash for that. It's like now, I mean, we saw it growing up to 8%, 10%, right? Like for mortgages and things like that. So I think that right now the opportunity for the least for the time being is to be able to do this strategy.
Yeah, definitely. So, of course, right now where Bitcoin itself is kind of going sideways. It's been doing this kind of sideways move, then it climbs up, sideways move, then it climbs up. It's not unheard of, right? But technically, I think right now we're still in the bull market. I think if we're using history as a past indicator, we would expect a peak in kind of the October, November timeframe. Again, not financial advice, but there will more than likely be another strategy that will work on the downturn, right, in the bear market. So it'll be good to understand and learn these strategies right now that work right now in kind of more of this bull market. And then once it switches, you can learn the strategies that work in that market.
So this strategy, if you're doing it consistently, it might get you between 50 to 60% a year, which is like, what the heck, right? So it's like compared to any index, I mean, 8%, 10%, right? Last year it was very good for S&P 500, but not sure this year, right? So it's very good, the strategy.
Yep. So think about it. Again, think or swim. I think you got to have a Schwab account as for your brokerage. It's just like any other account, set it up. It's like opening up a bank account. Use the paper trading. If you want to try it before you actually commit real money to it, they'll start you off with 100K fake money, right? It's not real money. You can even actually edit it to if you're like, well, actually my account's bigger. I want to start off with $1 million just so I know what to do. You can actually add money into your account so you can have $1 million account and see what that feels like and how much money you'd be able to make with that. Or you could scale it down to, a smaller account too, if you want to practice with, so that it feels, so you understand what it feels like. You start seeing numbers that really make sense for your specific situation, right? So, give it a try. We're not sponsored by these guys. Maybe we should be. Let's reach out. But we see this as a pretty good opportunity here. It's not too risky, and you can do this wheel basically where you're just going back and forth, making the premiums with IBIT here. So we think it's a pretty good call. Anything else, Mondo?
No, I think that we have a good one.
All right. Well, if y'all like the content, like, subscribe, comment. If y'all have got questions, let us know. We'll do our best to answer them there in the comments, so we can do another video with you. But till next time, then, y'all have a good one. Dale.
Peace.